Welcome everybody. This is the Thursday evening Viper trading webinar. If you're here to learn about trading the futures markets using the Viper's tools, you're absolutely in the right place. First, we got to get our standard disclaimer out of the way, so let's knock her down. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everyone in here does know that you do trade. Oh, excuse me. Sorry about that. Imminent Christmas. At your own sole discretion. All right, tonight's topic is anticipating the next trade. So without further ado, let's get over to some charts. Let's look at what happened this morning. And we're going to switch back over here to screen 1. All right, so I'm going to start with the YM chart here. And I see a couple of new faces. Most everybody here is either been with us a while or come to enough webinars to know the answer to this question. So here's the pre-market session on YM. And what is the first thing that we do? I want to make this question the hallmark of the beginning of every webinar that I do, just so that it's so ingrained in everybody's mind that there's no question about what we do in the pre-market to prepare to trade the equities. The very first #1 top priority is to do what? It's something, I'll give you a hint. It's something Gary does in the room a lot every day, right? It's something that I do every day. It's something everybody here should do every day. All right, good. Excellent answers here. Way to go. David D., Michael, Kenneth, Walter, Maurizio, Herman, draw lines on your charts. All right, so well, here, let me do a second part of the question. So now you're looking at YM, and let's pretend that you're going to trade YM, and this is the pre-market. Where are you going to put your lines? I'll give you 30 seconds. What levels would you put lines at on this chart? 30 seconds on the clock. Where are you putting your lines on the chart? Everybody in here typed in, almost, well, not quite everybody, but almost everybody said draw lines on the charts, which is the correct answer. The first thing we do every morning is draw lines. So what levels, excuse me, what levels where are we putting the lines? You can put in 1, 2, 3, 4, as many as you like. Where are you putting them? Let's go ahead and type it in. You can see over here is the prices, the right-hand axis of the chart, right-hand part of the chart right here. Where are those lines going? Where are you putting them? I know some of you didn't trade YM. That's okay. I'm just saying on this chart, where would you put lines if you were trading it? ¿Dónde está el líneos? All right, Chris has, okay, we'll give you a few more seconds. I see some numbers coming in. Michael, Chris, Jonathan G, those look good. David D popping a couple of numbers there. Kenneth, Chris, I like that. Those look good. Where are we putting our lines on this chart so we can prepare to trade? All right, time's up. All right, most of you said that the upper line should be up here around 60, 61, and that's a good level. And here's what I want to say about this real quick is that, drawing lines is not, I think most people, sometimes, and this may be some of you in here tonight, sometimes make a little bit more out of it than really warrants. A line is really technically kind of a region, right? So, you look back, the way I do this is I look at where the current, sort of closest swing is here, and then I'll look back and I'll see if there's any sort of confluence with some other swings, that kind of occurred, And then I'll sort of split those levels a little bit. So if you think of it, a healthy way to think of it is the top end of the trading range for this market right now is sort of up in here. And so you put a line here to simply have a demarcation point on your chart so that we can know what to do going forward. But the fact of the matter is, it's bounded by a little bit above it and a little bit below it. Yes. Many of you said to put the bottom line down here around this 25 swing, which was pretty clear. It came down into this 25-30 area several times, and it's sort of trying to bounce off of it a little bit, right? So you got a swing here, you get some swings down there, so you put something kind of like in there. That's it. It's something quick and visual you can do, and it only takes like less than a minute. Sometimes you'll have maybe a tertiary line up here. You'll have one more. You don't have to put a third line, but if you're in a range, yeah, you put the lines, and that's about where they would go. I think almost everybody got those right. Okay, now before we go forward, the whole topic tonight is anticipating the next trade. So we're clearly in a range. And before we even start trading, I guess the first question is this range tradable? Yes or no? I'm going to give you like 15. Some of these questions I'm only going to give you like 15, 20 seconds. You should be able to instantly look at your chart in here or on your own screen when you're trading in your home office or wherever you trade, and instantly know, hey, can I trade this range? And we all know, I'm going to help you out, we know that it's got to be at least 20 to 25 ticks to be tradable. It's got to have some meat to it, right? Now, that's not to say you're going to trade it. Maybe you won't trade it. But the fact of the matter is, based on our definition, with support down in this 20 at 530 area and resistance up near 60, you're pushing 30 plus ticks. Yeah, Michael, and a lot of feedback. Well, everybody said yes. Yeah, it is definitely tradable. Definitely tradable. And furthermore, I would submit to you, everyone here tonight and everyone listening on the recording, that we all would agree that as long as the price more or less stays within the confines of these lines, we are said to be in this range, a tradable range, and that we are consolidating. We are going sideways. We're not in a trend. This is not a trending market. So let's go ahead and advance the chart. Come down here, we hit the bottom. Let me blow it up so we can all kind of watch it together. Here's the open of the market right here, 6:30 Pacific, right down in here. 6:30 would have been, here's 6:29. So here, let me put the open of the market. It would have been somewhere right around, I don't know, right in there, plus or minus a bar or two. There's 6:32, there's 6:36. You can see we're a couple of 5-10 minutes into the market, and we're remaining below the mid-band. We are not taking the bottom out. We are not taking the mid-band out. Now here you can see we came down, we poke up close to support, and then we come down and touch this bottom area. So let me ask you this question. And I'll tell you what I'm going to do. I'll advance it a little further, and then I'm going to answer this question. If you were going to trade this range, which we all said was tradable, and it's hitting the bottom and it's hitting the top, here I'm going to advance the area box where we know it's bound by an area. And we had this area over here. Is your primary mode of entry going to be to buy the bottoms, so that's B, and then you take profit scalping at the top? Are you a short seller of the top, so S, you're shorting top and you're covering down here? Or would you do both, buying and selling? So you're buying down here, support, you're scalping and getting out at the top, you're rolling over, you're taking the short, and then repeat. Come bounce, buy, and then you just take the thing and back up. Are you doing both? Or are you B, just primarily buying, or S, just primarily selling? What would be your approach to trading this range? And while you're pondering that and putting your answers in, let me go ahead and advance the chart a little bit here. Maybe try to help you out a little bit. All right, interesting. We are getting an interesting mix of reactions here. Kenneth is selling the top. David D is buying short from Dave and Walter. Jonathan G is doing both. So there's a few boths in here, and then Chris is buying. Jack is shorting only. Now I do want to factor a couple of things into play when you look at this, okay? And this is how I look at it, and you know, you may look at it differently, and you know, you're right at the open of the market. We've always said to have an open mind about open markets, yes. So I mean, the fact of the matter is that the market could go any direction at the open, and we know that. But looking at a little bit further back on the chart here into so midnight Pacific was here. This is where the start of the European session would have been right there. And so into the close yesterday and in through overnight session into the European session, it was choppy, but you could make the argument that it was trending which way? Excuse me, from like here, you know, down into here. You know, punctuated by lots of sideways choppiness, but the fact of the matter is you were going what direction? And of course you have clues here, you know, you have the background color, you have the stepping of the bands, the mid band, and then of course you have the bar colors. In fact, it took the swing out up here. Yeah, the trend is primarily down. Right, the trend is primarily down. So if the trend is primarily down, when you have a range, what is your primary mode of entry? If you're coming off a downtrend and you're consolidating in a range, and the background is red, bars are primarily red, and you're still kind of, you know, you're sideways, but you're kind of stair-stepping down here. You're shorting, right? You're shorting it. So the risk of buying support for those of you who said buy, excuse me, and for those of you who are trading both, there is an inherent risk that it can hit that bottom, you get in, and then you get stopped out, right? So, you know, in reality, given the condition that this was, when you come up into this resistance area, you're looking pretty much for rollovers to get short, and you would keep tight stops above wherever that recent swing is once you get in on the rollover, right? So for me personally, shorting the top. Now, one last comment on this before we advance the chart and look at what happened. We all know that we try to avoid this whole idea of mid-band boxes when we're in a range like this, right? This is not, and I've said this, you know, scores of times in countless webinars, is that when you're in a trading range, and especially when, you know, the mid-band is kind of around the middle of the range, we're not doing retracement trades in a trend here, right? You know, we're taking, you got to take trades at the outermost swings to get in and out. That's how we trade a range. You know, we're not, you know, there's just nothing to get here. If it breaks up, you maybe get a scalp if you're lucky, and then you're stopped out. And then, you know, it's just, there's no meat to take those kinds of trades. All right, so let's advance. Here we go. We come down. We, the shorties who shorted up here, you know, you got your trade on. And then let's follow on with what happens here. We start to kind of chop around the bottom a little bit, start to break down, and it's just sheer chop down at the bottom there. Now we're here at 7:30. There was some minor news that came out. Didn't really have much of an impact. It came out at 7. You can see there was very little or no, very muted, muted reaction. Excuse me. How many of you like this kind of price action? How many of you don't like it? How many, just show of hands, how many got chopped up today? How many got a little bit of whack-a-mole on? You got a little bit of whack-a-mole there. You know, this is what makes this tough too, is look what happens here. You know, it breaks down, you're starting to think you're going to get some follow through to the downside, and then the shorties start covering, drag this, you know, silly thing all the way back up towards the top. Now listen, you've heard me, everybody in here has heard me say this. This is another thing I know I say all the time, but I hope that at some point it kicks in. If you don't like this kind of trading and you get in here and maybe you get a little trade. You short it, you buy, you get stopped out. You're kind of chopping around. You're up, you're down a little bit. You're hovering around that break-even mark. What do you need to do? You're trying to get in here. Maybe you box it in here. You think it's going to go somewhere. It's just chopping all over the place. It comes down here, breaks support again, starts to get you short on a little breakdown. Maybe you did a mid band here, and then you got a scalper out of it. Stand down, sit on your hands, wait for a trend change. Jonathan G, I made good money at the open. Well, okay, well then you got to lock it down when the chop happens, yes? What I'm trying to say is this. The fact of the matter is there are 3 trading decisions that we all make every morning, right? Are we in a trend? Should I be buying and getting long? Are we in a downward trend, and I should be selling and getting short? Are we in a range, and do I want to trade that range? And the second part of that third question is, if I don't like this range and it's just simply too choppy for me, I'm going to choose to stand down and not trade. That is a choice. You don't have to trade. If you get a little whack-a-mole around, like I said, you take a couple of trades, you make a little bit of money, and then you flip-flop and you get stopped out and you're down a little bit. You don't have to continue to fight through here. Until something happens, the catalyst to change this market up or down, it's going to stay choppy like this. It just is. You're willing, you can't will it to change. It's going to change, and I'm going to come in here, and I'm going to make all this money back, and I'm going to knock it out of the park. I'm going to watch. It's going to break, and I'm going to get a runner. I know I'm going to get a runner. You're not going to get a runner. It's just not going to happen. So stand down is a great option. I mean, I've always had this saying. I would rather go down at home at the end of the trading session with nothing than go home with a big loss. If that was your 2 options, which would you pick? Which one would you pick? Here's your options. You go home with nothing, or you go home with a loss. That's all the choices you get. There's no other choices. It's those 2. Yeah, I would pick goose egg. I would too. All right, now watch what this silly thing does here. Let's just play out the whole rest of the day, and let's just talk about it, and then we'll pull up a couple other charts, okay? I don't want to spend all night on this one, but I do want to cover a couple last things, and then we'll wrap it up on here. So after we push through down here, and we go down and we check the swing, and then we break it a little bit. As I recall, we were short. We got short here, so I can't remember exactly where we got short. Remember we were short? Walter, I think you were in the short, weren't you? A couple of people were in the short, I remember. And I remember the stops were here, like around this 25 or 30 area, remember? 25 or 30, remember? And it came up and it stopped us out. And then I thought there was a little pause here that we got a chance to put a box on it and flip it. Yeah, you can't really tell, but this actually wound up sitting here for a little while. It took a little time for these bars to form, and you got this little pop, and then silly thing then took off and ran up, and then started to look like it was going to give you, well, this is later in the morning, okay? I don't know if we caught this. No, I'm thinking of this short over here, right? Yeah, I'm thinking of this short. Sorry about that. I'm thinking of this short. We were short from here. We stayed in, stayed in, and stayed in. It put this fresh low. It was bouncing double bottom at 10, and then it came up and took us out here. Yeah, because it's 8 o'clock. We wrapped the room around 8:05, 8:10, so we're just closing the room right about here. Anyway, you come down, and then it looks like it wants to take off. Look at this. If you traded late in the morning into the close, you started to get a series. See how we took you did this classic sort of little bit of ABC pattern where we take the top of the range out one more time. We pull back. Finally, the top of the range holds as support right in here. And then you start to get a little stair-stepping pattern up where the background changes to green, right? We're getting predominantly blue bars. Our mid-band and all the bands are now starting to stair-step up. It looks like we're finally going to get some kind of run up here, yes? Get a little yellow bar probe down, close to the mid band down here. Maybe you get a little pop at the end of the day here, popped up. And then just nothing, no follow through. Look what happens at the end of the day. Look at where it is at right now. Just sitting right here. Not even probably 10 ticks above that line that we put in there in the pre-market session. Adam, I don't think I'd be loading the boat. Adam's question is, would you load the boat around 1227 when on this yellow bar retrace? You could look at multiples here. It's a little late in the morning. There are occasions where you have to be careful late in the morning where, the market looks like you're going to finally get some runners and some follow through. And then like happened here, you can see we come back. The short answer to your question, I don't think so. This late in the day, I don't think I'd be loading the boat. If I dabbled in here, I'd only put maybe 1 or 2 on, 3 at the most. Yeah, we come down here, we get another little bounce, like we're going to sort of continue up. This little trend was starting to set up here. Get a little jaunt up out of it. Perhaps if you boxed it in, you got a little scalp, and then she went back into the sideways funk. So that's kind of what we had on the equities today. Now the Russell, on the other hand, had some more movement to it. I'd like to shift over if I can. Wait, let me do one other thing before we leave YM, and I really want to take just a few minutes to address this issue. I'm going to scroll back, and you can do this on your chart. Now, I'm going to show you a couple little things you can do that are going to help you see this real easy. And I've shown this before. I don't have it on this chart, on this workspace. Hold on, let me try to do it a different way. If you scroll back here, and I'm just gonna do this real quick. For the past couple of days on YM, it's going to look like this. Here's the 8th. This was yesterday. Here's the 7th. This was what's today? Thursday. This would have been Wednesday. Here's Tuesday. You could have had lines. What I'm trying to show here is that you could have had support and resistance lines that go back several days. And as this market has continued to just become range bound and consolidate, it's pretty much stayed in this whole range for like 4 days, right? I mean, here you go back on Monday. What's today? The 9th, 8th, 7th, 6th. So here's Monday. Here's Monday morning, midnight Pacific, going into Monday. So arguably, we started an uptrend way back here on Friday. And I wish I had my 1440 chart. If you have a chance, pull up a 1440 minute chart. I've shown this in other webinars. It emulates a daily chart on your futures markets without the gaps. So you won't have any big gaps in there. 1440 minute. Go back at least 30 to 60 days, 90 days, and then you'll be able to see a lot of support, resistance, and some trends that come out of that. But if you don't want to do that, then the helpful thing to do is scroll back and then sort of watch what's happening here. Here you had, here's Friday going into the weekend. We had this huge trending move up, right? Had sort of a deep retracement, and then here's Monday. Market opens up on Sunday here on the 5th. Here we're going into Monday. If you remember Monday, maybe some of you don't, equities were all just running up, remember? Just another run up. Just huge pushes up. Friday, momentum continues through over Sunday afternoon into Monday. We're trending up. And then let's look at the last 3 days. What's gone on the last 3 days? Well, let's kind of put them all in the chart here. Okay, here's the rest of Monday. Here's Tuesday. Let me see if I can really scrunch this down. The other way to do this, if you don't want to get more data on your chart, of course, would be kick it up just to look at the swings to like a 6 or an 8 range. I'm not going to do that. It might crash the data. But, you'll be able to see a little more clearly the swings like this. But basically, the last 3 days have been kind of in this big old range right here, yes? with the most choppy of it being today. I mean, since Thursday, Wednesday, Tuesday, since late on Monday, we have essentially remained within the confines of these outermost lines here, 17,900 up to 100 ticks. We've been chopping around in 100 tick range for 3 days. And I want to make a further note about this. This is the type of action you're going to get in the summer. We're in the summer months. I don't know if anybody has said it. You know, there's this old adage, oh, sell in May, go away, and then you hear all the pundits arguing, oh, that's an old wives' tale. That's not true. There's all manner of computer this and that and blah, blah, blah. But, you know, I can tell you, in fact, I'm going to show you. I'm going to do this. Here's what I'm going to do. I'm going to pause this for a second. I'm going to show you something to illustrate my point and show you that there is a dramatic difference in volatility between the spring months coming into Memorial Day weekend and after June 1st, after that Memorial Day weekend. Okay, I'm going to do a new chart. I'm going to go ahead and put that 1440 up because I think there's some value in showing this. Let's go ahead and show YM. But all the equities are going to kind of look like this. They're all pretty much the same, 1440. And I'm going to go back, let's see here. I'm going to go back 180 days. So that's 6 months since the beginning of the year, right? Here we go. I'll bring it up on the screen in 1 second. And I'm going to do one thing. Just I got to pause. Just bear with me 1 second. It will be worth your while. Because I'm going to show you something here that I look at, and we don't show a lot, but there is some value to it. Hold on, I'm almost there. All right, here it is. Let me expand this out. All right, I think this is enough to show, yeah, I could go back further, but I think this is going to show the point. All right, here's YM. You could pull up any chart on the equities, and it would look very similar to this. You could do ES. You could do, you know, the Russell. It doesn't matter. All the equities are pretty much the same, like this. Now, I want to focus on. I want to go back, and here's how I'm going to show this. Okay. This is a 1440-minute chart, and it's just a regular bar chart. I don't have any indicators on here. The only thing I have down here is the average true range, ATR, set to a 14 period. That's standard ATR. Just a standard out-of-the-box ATR on a 1440-minute candle chart. Now, can you notice the, let me make this full screen so I can just really illustrate my point here. Notice the volatility that you got back here in the end of December. And you can just visually, I mean, the ATR shows it, but, you know, what was your average true range volatility back here in the late part of last year into the early part of the year, January going into February? It was north of 300 ticks a day. Yes? Can you see the size of these candles? I don't know if you remember in the early part of the year, the huge swings we were getting. Remember we were getting like 60, 80 tick runs. Remember? They're just running it all the way up, running all the way back down. 100 tick runs, remember? Well, that was all of this. That was in here. See the huge swings up and the huge swings down. The market's swinging way down fast, flipping around, double bottom, come all the way back up. Now, after, here's a huge run up. Now, even though this was running up through late February going into March, what was happening to the average true range on your daily bars? What was happening here? Even though you were getting a nice uptrending move, you know, you had a couple of big days and then you had some choppy days, right? But what was happening to the ATR? What's going on here? Yeah, it's declining for 4 months straight. Now I want to make note of where we're at right now. Okay, see all this volatility and these big swings and the huge bars? Here, even up into here, you're still getting daily activity north of 200 ticks. 200 ticks, right? Here's 200 ticks. You're still getting 200 ticks. These bars are still decent size. This is up until Memorial Day. Still getting decent intraday movement, yes? What's happening now? Here's since Memorial Day is right here. Here's the bars since Memorial Day. And the ATR is at a 6-month low and still dropping. Where's the volatility here? Well, I can tell you this. We're capitulating at a top. First of all, everybody can see that, right? I mean, all the indices are at or near all-time highs. We're capitulating in a top. That's the first issue. Second issue, we're at in between Memorial Day and Labor Day, the summer months where we tend to get chopped. Look at the size of these tiny little bars. Okay, these little bars are what you're seeing today, like today. Here, look at these tiny little bars. That's this week, right here. So what does that mean? How does that affect us intraday? You might be saying, well, I see that, Charles. That's pretty cool and that's good information. But how does that affect me? Well, are we given this nature of volatility until it changes? What should we expect to be doing in terms of our trading style intraday? Let me put it another way. Until something changes, should we be looking for big runs? The likelihood of us getting big runs when you see something like that is what? Do we need, let me put it a different way. Should we adjust our trading style from what we had over here in these months into this? This is reality right now, okay? That's what the equities are right now. They all look like this. Go put a 1440 on any equity chart. Put ES up there if you want. It looks exactly the same. Scalpy time. Scalpy, scalperoo, Jonathan G. We are, for the most part, in scalping mode. Now, the exception to that would have been like Friday and Monday. See these bigger blue candles? Occasionally, throughout the course of a week, 1, maybe 2 days, as a rule of thumb in the summer, we might get a couple of runner days. When we see them on our intraday chart, which let me go back here, which we saw, let me come back and translate that into what's happening here. Here was the past 3 days. Those tiny little 1440 candles on the daily chart essentially was this mess right here. This is the last 3 days, within the confines of 100 ticks. We're down to 100 tick total top to bottom volatility on YM right now. Super choppy, scalpy, should you choose to trade it. Now, we can come back over here and we can see it's punctuated with occasional days where we will get some runs, okay? So, you know, if you haven't developed a range-bound trading style and you're not really into the scalping too much, then, you know, I would strongly urge you for the months of the summer to augment your trading repertoire, if you will, your toolbox, to include a little bit of scalping range-bound trading, because otherwise you could go entire days where you're just not trading at all, and you could miss some big moves, and that would be a shame. So try to work that into your mess. I know a lot of you don't like this. It's just, this is the reality we're going to be in for a while, okay? And occasionally we'll get punctuations of these little runner days like this. Well, you know, you'll make a little more money, right? If you're a trend trader and you like trends, these days you'll make the money that you want on your trend moves, retracements, boom, up, make the little bit of run. You know, but when you're living with this, you're just gonna have to scalp chop. That's just what all you're gonna have to do. Now let's take a look at oil. Let me flip to oil real quick here. Let me bring that chart down, and then we'll flip something else up here, and then we'll wrap. Let me get oil down here. Stand by. Just curious, how many of you trade crude? Anybody in here trade crude oil? Just a quick show of hands from the team. How many of you are crude oil traders? Oh, I see a few of you are. Okay. Do you get up early with? Do you get in the early part of the room and trade it with Gary? I know quite a few of you do. I think you do. Oh, good. Good. A few of you. Good. A lot of you trade crude. All right. Well, let's go back and look at crude at the pit open today, and then let's see how she did in the trading today throughout the course of the day. Let me get this chart teed up here. By the way, there are exceptions to that. I don't want to say if you're going to do the 1440 chart thing, which I strongly urge everybody to do on your chosen instrument, because sometimes you can get some good support and levels, resistance levels off of that, or whether it's trending, just like I showed you. You don't have to look at it all the time. I mean, just take a peek at it maybe a couple times a week. And then sometimes you can transfer the information if there's good support and resistance levels in there. You can put them right on your intraday trading chart, right on these charts right here. All right, so here's today. What's today? Do I have today? Today's all messed up. So, sometimes I have data problems with crude for some reason. Like later in the session, it gets all kind of messed up. Let's look at yesterday. If you're looking at crude or you're trading crude, I know Gary's very good at trading crude and calling out the trades, seeing them live in the room. But there are a couple of things to make note of. It is just a little bit pricier at $10 a tick versus your NASDAQ and YM charts, which are at $5. So from a risk perspective, they're half the this is twice the risk of those instruments, but it could be twice the return. So if you're on the right side of the trade, you stand to make for tick, it's contract for contract, twice as much money with crude. However, the flip side is the risk side. If you take a full pop on a stop out, it's twice. You get twice the pop. So 10 ticks to here or 12 ticks to here would be $120, and that would only be $60 on your $5 instrument, unless you're trading two contracts, of course. So the pit open yesterday would have been 6 a.m. Pacific, somewhere right in here. I'm guessing 6 o'clock would have been right about there. So like I said, I was not in the room yesterday at this time when the pit opened, but you can see that you were in what kind of trades. In fact, you probably took these trades here right before the pit open. Looks like you had a nice little long trade here, popped up, pulled back. Around 5-10 minutes into the session, you got this nice little yellow bar probe that turned out to be a nice little pop. Right? Anybody remember this? Anybody take these trades? This is yesterday morning. A nice long trade here, popped up, fresh swing high, stopped out over here. Yeah, I see a lot of yeses. Some of you actually took these. Now, interesting to note here, and this happens sometimes on crude and on the equities, is you get a yellow bar probe at the midband here. Now this would have been around 7 o'clock, slightly after 7 o'clock Pacific. And I think yesterday was inventory, yes? So while you did, I remember this. Yeah, I'm remembering this now. That's right. Okay, I remember this now. So what happened here was you got that little pop-up, and then 7:30 was inventory. I see a lot of new faces coming in. By the way, if you came in late, we recorded this. It'll be up on the web tomorrow. Let me show you the site we use for all our news. Most of you know about this, but I'll just show it for the visitors. It's called Forex Factory. Just bookmark it. It looks like this. And when you go in here, set your filter to US dollar, unless you trade the currency futures or Forex. You put all the instruments you trade on here, the euro, Canadian, Aussie. I just trade the dollar, so that's all I show on here. So yeah, today you had the unemployment claims, wholesale, and then yesterday, of course, was crude. Nat gas inventory was today. And here's tomorrow, consumer sentiment numbers at 7 o'clock. One of them shown is major impact. So we may get something at 7. We'll have to see out of that. So at 7:30 yesterday was crude, and you can see, most of you know, I think all of you, of course, know, you got this massive shotgun that occurred here. So you want to be out of everything ahead of crude inventory. This is a fairly mild shotgun. It's not unusual to see this thing swing 20, 40, 50 ticks up and then shotgun around and spike on down, and you really got to wait a couple of minutes before let it kind of settle down a little bit. So here's 7:32, and I think Gary, I'm not sure where he boxed it in. We took some long trades here, didn't we? I don't know if we boxed it here. I think it was either here or here. Does anybody remember? Had so much going on since then. We boxed it somewhere. I do remember we did catch this long. I do remember that. And we caught another long right here that popped up with a double top. Two nice longs, Michael. That's right. That's right. That's right. That's right. Just textbook. You know, we're expecting volatility at the inventory. We let the shotgun calm down. In the leading up to it, we had two longs. So far here at 7:45, almost 8 o'clock, we had 4 long trades. One here, the yellow bar probe, arguably 5 if you took the one before the pit open, but you know, maybe you didn't take that one. Well, it won't count that one. So generally speaking, you're in a range, but you're quasi stair-stepping up, and the backgrounds are primarily green. So in this condition, of course, you can see we were buying pullbacks into the mid-band and buying, right? Taking the profit when it pops up, buying support, profit when it pops up. Comes back textbook mid-band bounce, pops up. This didn't give you much, and it stopped out. We got the shotgun at the inventory. We get another little box, nice long trade, retraces, pops back up. 4 nice long trades. You could have been done by before 8 o'clock. Now let's see what happens after 8. You know, it's kind of a mixed bag on inventory days. If you traded oil for a long time, you know that sometimes you can get some big swings where the market comes up, comes down, runs up, comes all the way back down, and you get some nice big swings. Notice what happens here. I'm going to advance this chart a little bit. And this is sort of going with our theme for tonight, anticipate the next trade. I'm going to show you the next thrust move after. Now, you would have been coming up on 8, so I don't know if we caught this in the room or not. And we come down to the swing down here. Now that we've broken this, let me show you. Okay, we took out the mid-band. We took out this swing right here. You're coming all the way to the outermost band. What types of trades might we be looking for now? Now we're a little long in the tooth. It's 8 o'clock. And I think we were closing the room up here, so I don't know if we caught any of these. Let me help you out. Let me help you out. Let me do it this way. Let me put a couple lines on the chart and see if this helps you. And I'm sure Gary had these lines on in the chart, probably somewhere. I would put a swing somewhere kind of up in here, right? See the different kind of bars sitting right in there. So I'd put a line right there. And you could certainly put another line right down here because it came right to it. Excuse me. This was sort of the bottom of the trading range after the little shotgun, right? All right, let me help you out. From a sort of a range-bound trading perspective, one could make the argument that since this is a prior support area and you're coming into what perhaps could be a phantom set up right here, you could actually be buying this bounce down here, yes? However, it is possible that we could be getting a lower high, and several of you typed in, I'd be selling shorts. Kenneth and David D would be shorting it. So in that case, you know, you could be buying this area, but realizing that you might only get a scalp trade up into where? Right in here, and you might need to be prepared to flip it. Yes, because look what happened. With this spike down, we have, we've taken out several support levels. The background is turned to red, and we have predominantly red bars. Now, the mid-band has not stair-stepped down yet, so we don't have exact confirmation of a short setup, but we have to realize that we need to perk up our trading eyes and ears right in here, because we could get a bounce, and then we could get a rollover, yes? All right, let's see what happened here. Advance the chart. There's your bounce. Comes right up to that swing. See the value of having those lines on the chart? I'm not going to take them off, but I can tell you this, that without having those lines on the chart, it would have been a lot more difficult to see this bounce and this setup. And look what it does right there. It rolls. So you stopped out of your long trade, obviously, and you could have flipped and reversed it right there. Right in here. Or if you didn't buy the bounce, several of you, Kenneth and David D, you could have simply waited for the retrace and just taken the short, which rolled over and broke down and took that support level out. Questions coming in here. AG. His question is, how do you know when to take a phantom trade or just see what happens? You know, there are a few factors involved. Some of it is related to the time of day and what instrument you're trading, and whether it's really a trend change or not. You know, I know Gary loves phantom trades and he calls them in the room all the time. Truth be told, I'm not a big fan of them myself. I prefer to wait to see what happens. In this case here, I don't know that, I don't think I traded this, but I would have waited to look for a short roller up here. I would definitely can tell you with certainty I would not have taken that phantom trade. You know, there's been quotes out there that's a high probability trade. It really depends on the instrument you're trading and the time of day and the conditions. Here with oil, given the fact that it was a inventory day and you're expecting big swings up and down, it wouldn't have hurt to buy this. And you already knew it was support from over here, right? So it's almost a touchy-feely thing you're going to have to watch. There are times when markets come up, like today on NASDAQ. Let me switch over. I think that NASDAQ has a good example of that. Yeah, I don't mean to be evasive on my answer there, AG. I know you probably want a little more solid answer there, but you know, sometimes it really is almost kind of based on the conditions of the market, you know. Let's go back and look at that on NASDAQ, because I think that very issue came up. In fact, it flipped and ran 30 ticks up on us. I don't know if you remember that we wound up missing, and I'm still kicking myself over that because that was a good trade. Let's go back and look at that real quick on a condition that might address a little bit more of that question in regards to how to the approach to take phantom trades. Let me see if I can find where that happened. Where was that? Here's this NASDAQ. Is this today? Let me see if I got today here. Oh no, I'm on the wrong day. Oh, it's all messed up. I wanted to show that. Well, maybe I can show it over here. Hold on. Let me go back a day. When I loaded these charts, I had these charts set on a different workspace, so my apologies. So when I closed my other workspace, I came in here just before this all loaded up, and some of the data didn't load on some of these charts. So my apologies. I wanted to show this morning because there was a deal like that today where you know, it came up. I think there was one case where it hit the phantom, rolled, and then went back down, and then another case where it did a mid-band consolidation, ran right up through the outermost band, took it out. There was not even a pause there. So in that case, let's look at that condition here, AG, to further, and I'm sure other people have this question too. So, yeah, so this is yesterday. Here's today. My data's all messed up. It's not loading from this point forward. So let's just deal with this this day right here. And how you can do how you can handle when you take a phantom and it reverses on you. I think that's equally as important to know if you're going to take that trade, how you're going to deal with it. So going into here, let's see, 6 o'clock was over here, 6:30. So here's the open of the market. I think we caught this one, this reversal. I think we caught this. So you were kind of chopping around up here. Here's the open, 6:30. As I recall, we took this long trade. It popped up. Here, hold on 1 second, please. Stand by. Testing audio 1 2 3. Testing audio 1 2 3. Can everybody hear me? Am I back? Everybody hear me again? I think my USB got unplugged. Got up to make a shift something here, and I think it knocked my. Am I back? I'm back. Okay, I was kind of talking away there. Adam, yeah, we did miss that flip. I boxed it in. Excuse me, and I hesitated, and I looked at the price action just real quick on NASDAQ. From this morning, and I wanted to enable both sides because the way it was hitting the top of that little box there, I was like, excuse me, and NASDAQ is notorious for this. I just had a feeling it was going to pop and flip, and then I just made a stupid decision not to enable the long side, and sure, it just flipped and ran up 30 ticks straight up. But yesterday was different. Okay, let me take this line off of here first. So let's talk about what happened earlier in the morning, and then we can come back and talk about this condition right here. Yeah, so we cut here 630. We boxed it in. We got the long. We came back here. It sat on the mid-band here for a good 3-4 minutes, allowing us to get a nice box here set up. In this particular case, we let it go either way. It was 7 o'clock. We did have some news yesterday. I think there was a little bit of news yesterday. There was a JOLTS job openings at 7 a.m. shown as medium impact. Everybody remember that? Well, whatever it was, NASDAQ market did not like it. It sold off, and we did catch this short. Right here. I remember this. I got this. And I loaded the boat pretty good here, so this made some good money. And then we stopped out right here, remember? Now notice what happens here. We go up, and this is sort of your phantom trade setup. The way that works is that, you know, here we were in an uptrend. Here we flipped to a short, you know, to a downtrend. We come up, we consolidate the mid-band. It comes up to the outermost band. This is what the phantom is. Okay. Now you could make the case, you know, this is the borderline condition. Okay, let's just call it. Let's call it kind of a borderline condition, okay? You could still be shorting this up here. That's what the phantom is. You come up to the outermost band, the market rolls over, and then your target is the mid-band. You want it to roll over, and you want it to get down to here. Now, in some cases, it'll roll over and take the mid-band out like it did right here. But it doesn't quite. Here's the thing to make note of, is that these swings off the outermost band roll, are they going down and checking and taking the low out right here? Are we coming down into here and taking this out? Are we getting trend continuation? That's the question. Are these rollovers off of here, is it giving us trend continuation? Well, the answer is no, of course it's not. It's not even hitting here. It's not taking that out. Trend continuation would be breaking this and heading lower, yes? So what happens is, think of it this way, there's usually some breadcrumbs, there's clues that come along that start to tell you, hey, something might be changing. Now, over here, for instance, you can see that there was one more roll out of that outermost band up here, that depending on your entry actually gave you a scalper out of it if you were still shorting over here, right? So you would use that break even plus 2. You use the break even plus 2, so your initial stop's 10, 12 ticks up here. You get your scalper, you get your stop within a couple of ticks of your entry fill, and then this flip here would have taken you out. So in other words, your stop, most of you know that. I'm not going to get into a lot of details of it. We talk about it in other webinars. You get filled short on a rollover here. Your initial stop is 10 or 12 ticks higher. After you get your scalp of, you know, 5, 6 ticks, your stop comes down to within 2 ticks of your entry. So you would have got in on this bar and out on that bar right there. Okay, Michael. Yeah, I'm ready to wrap up here. We're right at 6 o'clock. But I hope this addressed that whole question about how to deal with the phantom thing. And I wish I could have shown it, but there was a mid-band box situation on NASDAQ today where, you know, if you were thinking of, I think there was a couple questions in the room. I'm just going to pretend that this was it. It didn't stop here and roll. It just plowed right through it. And when you get, obviously, it goes without saying, if you get that condition, you know, there's no trend has changed. There is no short trade there. Okay, let's go ahead and wrap up. I think this is a good session. We covered a lot. Any final questions before we close up the webinar here? I hope it helped. By the way, over here, of course, once we took this out, now we're in an uptrend. You get a nice little long trade setup right here, mid-band box. This is late in the morning. The room would have been closed, but you could have taken this. This is a good setup right here. Thanks for coming, everybody. If you're visiting us, come join the team. We'll be in communication with you. I think there's an open invitation. Tomorrow is the last day of our little summer kind of open house thing where we opened up the live room and the training for everybody to come visit. So I hope you've enjoyed that. Ciao bella, Mauricio. Kenneth, I would say that the trend changed from down to up right here when this was taken out, that swing right there. You know, this is always sort of this area I'm showing with circling with my cursor is always sort of the how would you put it, challenging area, because you're at the outermost bounds of what the range was coming off of a downtrend move. You're getting a series of higher lows because you're not taking out the bottom. There is no trend continuation here, right? And you've hit this outermost band 3 times, and the telltale sign that the trend was going to change was this higher low right here. This was a sign that you probably don't want to be shorting this anymore. And when it took this swing out here, and the background's green, and now you're stair-stepping up, now you're looking for retracement to get long, which you got right here. Okay. Yeah. So that's the way we look at it. So yeah, I mean, that's always the toughest part. Are you still shorting that range? I mean, there were other clues here in addition to the higher lows. I mean, you can see that the background was starting to sort of striped condition here. It's not solid green and it's not solid red. It's green and then opaque and the different colors. This is telling you transitions happening. Those are all the clues that's going on here. So I mean, that's the way you got to kind of handle that. All right, I'm going to stop the recording. Thank you for coming, everybody.